Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everyone, checking back in on gold, dollar, miners, everything fun. And we are at a very key point on the dollar heading into FOMC Wednesday. So we have this low of consolidation of 99.43. That's the support that we've been watching. Look at this 10-day moving average resistance I keep pointing out. 1, 2, 3, 4, 5. Another 4 rejections, 9 rejections, 4 in a row, and a dump to lower lows. So we're touching this support level of 99.43. We drop down to 99.43 to the penny. The bulls are attempting to defend that level, and if we zoom out, we see why it's important. We have had a higher low pattern for the last 8 months, and if we break that level, that higher low pattern is no longer very clear, and we then have lower lows. So on the hourly time frame, we were in oversold conditions. We bounced off that level to the penny. We bounced up to 99.80, and then we bounced off that level to the penny again. So it's very clear that the bulls are defending this level. And the question is going to be, will it break before tomorrow afternoon and before the FOMC meeting, or are we going to be positioned where we're either going to see a nice bounce or a clear breakdown? In a couple different scenarios that could play out, let's say we hold that support, and again, technical analysis is not an exact science. We could dip down 5 cents below it and then bounce. Doesn't have to hold that penny exactly, but if it's a bullish reaction, we then are set up for a potential bearish reversal head and shoulders pattern, and it would be pretty early for it to be playing out, but we would be watching on a bounce for some weakness for a potential. And again, this is very, very early. I would never make any trades based on this. This is just looking ahead as to what we could potentially expect going forward. And if we were to see a bounce off of this level, it would create a neckline, and we would be looking for that potential pattern. But that's way too early, so we have to watch how we respond to 99.43 support and the FOMC. Gold bulls held up really well today, and we turned that 10-day moving average into support now, and we're just looking back at the high we've seen on this move of 12.20. So we look at the hourly time frame and see nothing but higher lows and higher highs since this bounce played out. We've got an uptrend support line to be watching here. That's still holding, and the bulls are forming some nice consolidation. The low of this consolidation is support of 12.0866, and the highest price we saw was resistance of 12.1520. So there was a nice pattern to be watching on the 5-minute time frame into the afternoon on gold. And again, the correlation to the overall market. And the bulls have to be pleased with how the day ended, because the market bounced really, really strong, and gold pulled back, but not as significant as you would expect with the strength of the market bounce at the end of the day. The market hit a high of the day at the close, and we did not see significant pullback. So this is gold on the 5-minute time frame. We had this nice 5-minute channel, a clear bull break, leading to some upside, not a ton of gains to be had, but the bulls are in control. That's what it's telling us, and we're seeing that on the hourly time frame as well. So obviously gold's going to have a reaction to the FOMC, And we're going to be watching the correlations between the market, the dollar, and gold, and we're going to see how that translates into the miners. We know the miners react the most significantly when the market and gold are going in the same direction. So we always have knee-jerk reactions to big events where the first 5 or 10 minutes, we can't be too certain that that's the way things are going to go, where there's often a complete 180 turnaround and it goes in the other direction. But after the first 15 minutes or so settle down, going to be watching the correlation. If we see market weakness and gold weakness, we need to be all over those minor bears because they're going to be magnified to the downside. And whenever we see 20% days on these ETF bull miners or bear miners, it only occurs really when gold and the market are headed in the same direction. Because think about it, if you have gold miner stocks on the stock exchange, there are algorithms that keep everything somewhat correlated generally. And if the market's going up, obviously that's going to be bullish momentum. And then if you have gold going up at the same time, it's really a double whammy where all momentum is going in the same direction. So you can think of it as like a boat on the ocean where you have gold driving the bulls forward, but there's a little bit of headwind if the market's going down, slowing down the bulls' continuation a bit. But if both winds are going in the same direction, it really gives a lot of momentum to our little gold miner boats. So looking at GDX on the daily time frame, nice gap up and a strong close at the end of the day. So we have maintained the higher low pattern that never broke. We came pretty close, but it maintained 21.90 up to 22.55, 22.78, and now we're looking at the highest price we've seen on this move, 24.25, a bullish reaction to gold on the FOMC, and we will break that level and look at the 200-day moving average resistance of 24.92, and a bearish reaction, and we're looking down at 22.78, the low of the previous consolidation. Weekly time frame is an indecision candlestick last week, bulls holding up well this week, and it's really going to be up to tomorrow to let us know if we're going to turn this 50-week moving average into support and continue, or if we're going to break this higher low weekly pattern 6 weeks in a row. We formed a higher low now, and a bearish reaction would likely lose that pattern that certainly favors the bulls. Let's check in on GDXJ. So similar close at the high of the day. We're looking at resistance, 38.58, the highest price we've seen, and the 200-day moving average resistance is going to be right around that level as well. And in terms of support, same thing, higher lows still intact, looking at 36.08 support, a bearish reaction and a break of this higher low pattern, and we will be looking for downside, and Dust and JDST will be the plays. And if not, we're looking for the bulls to continue strong. Same thing with the higher low weekly pattern. Let me zoom in a little bit here. But it's all going to come down to the reaction and whether or not gold breaks 1220 or it heads back down to 1180. So we have all kinds of levels we can be watching. And if this were your day tomorrow, if all you trade is gold miners and this is your bread and butter, I would have all these levels written down. So if I were in GDXJ, I would write down this resistance of 38.58. Then I'd find the next resistance of $40 even. I'd write down my support levels. I'd write down gold 1220 and 1180 with those key levels to be watching. And I would be watching, if I were not in a trade, and if I were looking to make a trade after the initial reaction, once things settle down in the first 10 minutes or so, I would be looking at the correlations between everything. And I would be playing, if I were going to choose a bull miner, I would choose NUGT. And if I were going to choose a bear miner, I would choose JDST. And that's just because there's been these subtle differences recently where the senior miners are more bullish than the junior miners. But, of course, that correlation could change tomorrow. So, again, we have to keep our eyes on it. But there's all kinds of things to be watching. If you got multiple monitors up, which I certainly suggest you do, if you're trading miners and you don't have multiple monitors, for $99, you can get a nice big monitor that will change your life. So you need to be watching the dollar, gold, the S&P 500, and whatever individual miner you are interested in. So I'm going to be watching this level overnight, 99.43 on the dollar. Well, that's the most critical level in terms of anything to be watching for overnight trading. Don't think anything significant is going to happen with gold overnight. We could consolidate back down to 1205, the low 1200s, and still be in a nice uptrend. So not going to be any significant changes unless we see a bull break over 1220 of gold overnight. But tomorrow will be very key, and we are going to be watching that reaction very closely. So again, don't get faked out by that knee-jerk reaction. Be a little bit patient because things very often give a complete 180 turnaround. I appreciate you watching. We'll check back in tomorrow and see how it all pans out and how it's going to set us up for the month of February. And I'll see you then. Thanks for watching.